Dear students, welcome to my channel HSC English Version Tutorials. Today we will learn the process of passing journal entries. The students who have the skill of passing journal entries will be able to solve the maximum problems of accounting, such as preparing ledger, trial balance, balance sheet, and so on. So, we will try to learn the process of passing journal entries from the very beginning by using some awesome tricks. I can assure you that after watching this part 1 tutorial, you will be able to pass about 95% of journal entries yourself. In our part 2 tutorial, we will learn how to pass the remaining 5% of journal entries. Okay? Now, let's start by answering this basic question first. What is journal? Journal is nothing but an accounting record. An accountant at first records the transactions in a journal book on behalf of a company or an organization. Then from journal book he prepares ledger, then ledger to trial balance, and after then trial balance to the balance sheet. Look at this format now. This is the format of journal. Here we write the owner's name or the company's name mentioned in the question. Here we write the date according to the transactions. This is particulars column. We write here account's name. For example, I am writing here furniture account and here to cash account. It is just an example. You need not to understand here anything. Okay? Why this account is to be debited or why this account is to be credited. We will learn that later. See, here the word credit is missing. If you write here the word to, you need not to write here the word credit. Okay? Here we write the amount and here also. Do remember the amount that we will debit here in this column, exactly the same amount we will have to credit here in this column. That means the total amount of this debit side must be equal to the total amount of this credit side. This is called double entry system. In accounting, we have to follow this system. In double entry system, what we see is every transaction has two effects, a debit and a credit. Both of them have to be recorded and the amount of debit will always be equal to the amount of credit. Now look at this column. Here L is for ledger and F is for folio. We need not to write here anything in this column. Actually, this column is for future reference. We write here summary of the transaction in our own words. We will have to leave a bit space here. Note that while solving any type of problem of accounting, always you have to think yourself as an accountant of the company mentioned in the question. This realization will help you a lot, not only for passing journal entries, but also for preparing ledger, trial balance, balance sheet, and so on. So, this is the rough format I wanted to show you so that you can get an idea about what are we doing over here. For passing journal entries, you will have to follow 4 steps. Step 1. By applying tricks, at first you will have to identify whether the mentioned events in the question are transactional or non-transactional. Do remember, you will get mentioned both transactional and non-transactional events in the question for passing journal entries. From those mixed events, you will have to find out which events are transactional or which events are non-transactional, because only transactional events are applicable for passing journal entries. You will have to avoid those entries that are non-transactional. Okay? Step 2. After determining the transactional events, you will have to find out the accounts that are involved in each and every transactions. Do remember, every transaction has at least 2 accounts. Step 3. You will have to use the tricky word dealer to find out which account is debit and which account is credit. At last, in step 4, you will have to show the accounts in the journal book according to debit and credit. So, these are the steps that you will have to follow for passing journal entries. Now we will learn these 4 steps one by one. In step 1, you have to identify whether the events are transactional or non-transactional. By using a simple trick, you can easily identify them. For this, you have to ask yourself 2 questions only. What has come into the business and what has gone from the business? If you get only the answer of this question or only the answer of this question or both the answers of these 2 questions, then you will have to assume that the event is a transactional event. On the other hand, if you do not get any answer of both of these 2 questions, then you will have to assume that the event is a non-transactional event. Let us understand the trick with some examples. Look at this event. January 2, paid into bank taka 8,000. Now ask yourself, what has come into the business? Nothing, isn't it? Why nothing? See here, the company just deposited the money into the bank, but in return the company didn't get anything. Okay? Now ask yourself again, what has gone from the business? The answer is cash. Why cash? Because for paying cash into the bank, cash is going out from the business. See, among these 2 questions answered, you have got the answer of this question. Therefore, you can say that this event is a transactional event. This event is applicable for passing journal entries. Look at this another event now. January 3, purchased furniture taka 12,000. Here, for purchasing furniture, furniture has come into the business. The company purchased furniture by giving cash, so cash has gone from the business. Now ask yourself, what has come into the business? The answer is furniture. So you have got the answer of this question. Now ask yourself again, what has gone from the business? The answer is cash, isn't it? So you have also got the answer of this question. That means you have got both the answers of these 2 questions. Therefore, you can assume that this is also a transactional event. This event is also applicable for passing journal entries. But look at this event now. January 5, an order for supplying goods taka 30,000 sent to Reshma Traders. See, this is just an order. For placing an order, neither anything is coming into the business nor anything is going out from the business. Therefore, you are not getting the answer of this question, what has come to the business, and this question also, what has gone from the business. As you do not have both the answers of these 2 questions, you have to assume that this event is a non-transactional event. Non-transactional event is not applicable for passing journal entries. You will have to avoid this type of events for passing journal entries. Okay? So, this is the process I wanted to show you so that you can understand well how to find out transactional and non-transactional events and which events are applicable or which events are not applicable for passing journal entries. Okay? Let us learn step 2 now. In step 1, you have got these 2 transactional events, right? Now, in step 2, you will have to find out which accounts are involved in these 2 transactions. You can find out them easily by applying tricks. Look at these 6 questions. Number 1. What has come into the business? Or why has gone? Or where has gone? Number 2. What has gone from the business? Or why has come? Or from where has come? Out of these 6 questions, these 2 questions are the main questions. These 2 questions are under this main question and these 2 questions are under this another main question. At first, you will have to ask yourself these 2 main questions to get all the accounts that are involved in a transaction. You will get at least one account by asking yourself these questions, and you will get the other account by asking yourself these questions. If you do not get the answer of this question, then instead of this question, you will have to ask yourself this question. And again, if you do not get the answer of this question also, then you will have to go for this third question. The same process you will have to apply here. Okay? Out of these two transactions, now we will apply the tricks on this transaction first. January 2 paid into the bank taka 8,000. For this transaction, ask yourself, what has come into the business? Nothing, isn't it? Why nothing? Because for paying cash into the bank, the company is not getting anything in return. Okay? So, as you do not have the answer of this question, you have to ask yourself this question now. Why has gone? Do you have any idea why the money has gone from the business? No. Am I right? As you don't have the answer of this question also, you have to ask yourself this third question now. Where has gone? The answer is at bank, isn't it? This bank account is the account that is involved in this transaction. So you have got one account by asking these questions yourself. Now you will have to find the other account that is involved in this transaction by asking yourself this question. What has gone from the business? You know the answer of this question, and that is cash, don't you? This cash account is the another account that is involved in this transaction. As you have got the answer of this question, you need not to know the answer of these remaining two questions. Okay? This is the trick to find out the accounts that are involved in a transaction. Now let us find out the accounts that are involved in this second transaction by using this trick. January 3 purchased furniture taka 12,000. Now ask yourself, what has come to the business? The answer is furniture. So for this transaction you have got one account, and that is furniture account. As you have got the answer of this question, is it necessary to know the answer of these two questions? No. So ask yourself this question now. What has gone from the business? The answer is cash, isn't it? So you have got the another account that is involved in this transaction, and that is cash account. Do you understand? Do remember, you have to be very careful about the name of some accounts that are involved in a transaction. Number 1. In accounting, the word goods is not acceptable for passing journal entries. Instead of this word, you will have to use either purchase account or sales account. For the transaction goods purchased, you will have to write only purchase account, and for the transaction goods sold, you will have to write only sales account. Not only that, if the owner of the company starts his business with goods, then you will have to write purchase account instead of the word goods. Why you will have to write purchase account? Because before starting the business, at first the owner had to purchase that goods, and then he started his business with that goods. Number 2. If the owner starts his business by bringing anything to the business, then capital account will be formed. You have to remember that whatever the owner brings for the company will be regarded as capital. On the other hand, whatever the owner takes from the company will be regarded as drawings. Number 3. If you get any person's name in a transaction without mentioning the word cash, then you will have to assume that the transaction is a credit transaction. For a credit transaction, instead of the person's name, you will have to write either accounts receivable or accounts payable. Now the question is, when you will have to write accounts receivable or when you will have to write accounts payable? When goods sold to someone in credit, then you will have to write account receivable instead of the name of the person. Why account receivable? Because the company will receive the money in future. On the other hand, when goods purchased from someone in credit, then you will have to write account payable instead of the name of the person. Why account payable? Because the company will have to pay the money in future. Number 4. In accounting, the words computer, calculator, typewriter, photocopy machine are not acceptable for passing journal entries. Instead of these words, you will have to write office equipment only. The things that need electricity to run will have to be treated as office equipment. Number 5. Instead of the words chair, table, almirah, you will have to write furniture account. The things that are used for beautification only will have to be treated as furniture. Number 6. The word check is not acceptable for passing journal entries. Instead of the word check, you will have to write either cash account or bank account or only bank account. Now the question is, when will you have to use either cash or bank account, or when will you have to use only bank account? For getting check, the name of the account will be either cash account or bank account. Now again the question is, when will you write cash account for getting check, or when will you write bank account for getting check? If the company gets cross check or account pay check, then you will have to write bank account. And if you do not get this word cross check or this word account pay check mentioned in the transaction, then you will have to write cash account. Okay? On the other hand, for giving check, you will have to write bank account only instead of this word check. Number 7. For the transaction goods returned to someone, you will have to write the account name as purchase return or returns outward. And for the transaction goods returned from someone, you will have to write the account name as sales return or returns inward. Now we will learn the third step. See, in second step you have got these two accounts for this transaction and these two accounts for this transaction. In this step you will have to find out which account is debit and which account is credit among these two accounts for this transaction, and you will have to find out which account is debit and which account is credit for this transaction also. To find out the debit account and credit account, you will have to use this tricky word D+R. See, there are 6 classifications over here: D, E, A, L, E, R. Here in this group, D stands for drawings or dividends, E stands for expenses, and A stands for assets. And here in this group, L stands for liability, E stands for equity, which means capital, and R stands for revenue, which means income. These 3 are debit items and these 3 are credit items. Why these 3 are debit items or why these 3 are credit items? Actually, there are no logical explanation behind that. It is just a rule. Okay? For this group, if drawings or dividends, expenses, asset increases, then you have to debit them. And if they decreases, you have to credit them. It is opposite here. For this group, if liability, equity or capital, revenue or income increases, you have to credit them. And if they decreases, you have to debit them. That's what the trick is. Simple, isn't it? Look at this chart now. All of these accounts are belong to this asset. Asset is debit. So all of these accounts will be debit. If these account increase, they will remain debit. And if decrease, they will turn into credit. Now I want you to focus on these two accounts of this transaction. See, bank account is an asset, and for paying cash into the bank, asset is increasing here. Asset is a debit item. Asset is increasing means debit is increasing. If debit increases, it will remain debit. That means bank account will be debit here. So as an accountant of the company, what will you do? You must debit this account here and write the amount taka 8000 here in this debit column. Okay? See, cash account is also an asset. Cash is decreasing here as it is going out from the business. That means asset is decreasing here. Asset is a debit item. If asset decreases, debit will also be decreased. If debit decreases, it will turn into credit. That means cash account will be credit here. So, as an accountant of the company, what will you do? You must credit this account and write the same amount taka 8000 here in this credit column. Why will you have to write exactly the same amount here? I have already told you that this is called double entry system and you are bound to follow the system. The total amount of debit side must be equal to the total amount of credit side. Okay? Now I want you to focus on these two accounts of this transaction. See, furniture is an asset and for purchasing furniture asset is increasing here. That means debit is increasing here. If debit increases, it will remain debit. Therefore, as an accountant of the company, what will you do now? You will have to debit this account with taka 12,000. For purchasing furniture, cash is going out of the business. That means cash is decreasing here. You know that cash is an asset. That means asset is decreasing here. Again, asset is a debit item. Asset is decreasing means debit is decreasing. If debit decreases, then it will turn into credit. So, as an accountant of the company, what will you have to do? You must credit the account with the same amount. Okay? Like the chart of these assets items, you will have to know about these charts also. This chart is for expenses. Expenses is debit. So all of these accounts that are belong to expenses will also be debit. If they increase, you will have to debit them, and if they decrease, you will have to credit them. This chart is for revenue or income. Income is a credit item. So all of these accounts that are belong to income will also be credit. If they increase, you will have to credit them, and if they decrease, you will have to debit them. This chart is for liabilities. Liability is a credit item. So all of these accounts are credit. If they increase, you will have to credit them, and if they decrease, you will have to debit them. Okay? So, my dear students, I hope you have understood the importance of these classifications. You should have the skill to categorize the items properly. In step 4, you will have to show the accounts according to debit and credit in the journal book with summary. Don't worry, we will solve this problem now and we will see practically how to pass journal entries step by step according to this problem. On January 1, 2022, Mr. Rahat started his business with cash taka 1 lakh. January 2, appointed a salesman with a monthly payment taka 5,000. January 7, bought goods for taka 20,000. January 20, bought goods from Mr. Mizan taka 25,000, and January 30, paid to Mr. Mizan taka 25,000. We are asked to prepare journal entries of the transactions. Think you are the accountant of this business and you are going to record transactions in the journal book on behalf of this company. Both transactional and non-transactional events are mentioned here in this question. So, as an accountant of this company, what will you have to do first? You have to recognize them by using the trick of step 1. For this event, January 1, 2022, Mr. Rahat started his business with cash taka 1 lakh. Ask yourself this question first. What has come into the business? This cash amount, isn't it? I have told you that to be a transactional event, you need to get at least one answer from these two questions, and you have already got one answer. So, you can say that this event is a transactional event. Look at this event now. January 2. Appointed a salesman with a monthly payment of taka 5,000. Now tell me, only for appointing a person in the business will the company get anything? company will get nothing. Am I right? Therefore, if you ask yourself this first question, what has come to the business, you will get no answer of it. Now tell me again, only for appointing purpose, will the company give anything to the person? No, the company will give nothing to him. Therefore, if you ask yourself this second question, you will also get no answer of it. If you would get at least one answer out of these two questions, then you could say that this event is a transactional event. As you do not have any answer for both of these two questions, therefore you can say that this event is a non-transactional event. You have to avoid this event for passing journal entries. If you apply these tricks one by one for these remaining events, you will see that all these events are transactional events. Try to figure them out yourself at home. So you have got these transactions over here. Now from these transactions you will have to pass journal entries here in this format. See, Mr. Rahat is the owner of this business. You have to write here this name, Mr. Rahat. For this first transaction you will have to write here 2022 and here January 1. Now you will have to find out which two accounts are involved with this transaction. For this you have to ask yourself these two questions. So ask yourself this question first. What has come to the business? The answer is cash. Why the answer is cash? Because Mr. Rahat started his business with this cash amount. So cash has come to the business. That means cash account is involved with this transaction. As you have got the answer of this question, you need not to ask yourself these remaining two questions. Okay? Right here cash account. Note that you have yet to find the other account that is involved with this transaction. But before that, you will have to find out whether this cash account is debit or credit. For this, you will have to apply dealer rule. See, for bringing cash by the owner, cash is increasing here. Cash is an asset. That means asset is increasing here. Asset is debit also. Asset is increasing means debit is increasing. See, if debit increases, it will remain debit. So, as an accountant of the company, what will you have to do now? You have to debit the account. So, write here debit and write here this amount, that is 1 lakh in this debit column. You know that every transaction has at least two accounts. One is debit and the other is credit. Out of these two accounts, you have already got this debit account. Now you will have to find out the other account by asking yourself this question: what has gone from the business? So for this transaction, what has gone from the business? Nothing, right? As you have no answer of this question, what will you do now? You will have to ask yourself this question now. Why has come? Can you tell me why this cash has come? Because to start business, the owner has given the cash. I have already told you that whatever the owner gives will be regarded as capital, and whatever the owner takes will be regarded as drawings. Therefore, as the owner gave the money, capital will be the name of the other account. Write here capital account. Ultimately, you have got two accounts that are involved with this transaction. Now, you will have to find out whether this account is debit or credit. See, capital is a credit item. Because of bringing cash by the owner, capital is increasing here. That means credit is increasing here. If credit increases, it remains credit. So, as an accountant of the company, what will you have to do now? You have to credit this account. Okay? So, write here to capital account. The word to means credit. Therefore, you need not to write here credit. Okay? Now write taka 1 lakh here in this credit column. Why will you have to write here the same amount? I have already told you that according to the double entry system, the amount of debit will always be equal to the amount of credit. Write here the summary of this transaction. Being business started with cash as capital. Look at this transaction now. January 7, bought goods for taka 20,000. See, is there any name mentioned here from whom the goods were purchased? The answer is no. Again, the word cash is not mentioned here also. Therefore, you have to assume that this transaction is a cash transaction. Now, you have to focus on another word here in this transaction, and the word is goods. I have told you that the word goods is not acceptable for passing journal entries. Instead of this word, you will have to use either purchase account or sales account. As this transaction is for purchase, therefore for this transaction you will have to use purchase account instead of this word goods. Okay, so for this transaction write here January 7 and find out which two accounts are involved with this transaction. Ask yourself, what has come into the business? Goods, isn't it? That means you have got goods account here. As goods account is not acceptable, therefore instead of goods account you will have to write purchase account here. Okay, now find out whether this account is debit or credit. Purchase is an expense account. Here the company had purchased goods to sell them, so purchase account is increasing here. That means expense is increasing here. On the other hand, expense is a debit item. That means debit is increasing here. You know that if debit increases, it remains debit. So you will have to debit this account. Therefore, write here purchase account, debit, and write here the amount taka 20,000. Now find out the other account that is involved with this transaction by asking yourself this question. What has gone from the business? You know that this transaction is a cash transaction. That means for purchasing goods, cash has gone from the business. Therefore, cash account is the other account that you are looking for. Now find out whether the cash account is debit or credit. Cash is an asset item. For purchasing goods, cash is decreasing here. That means asset is decreasing here. As asset is a debit item, debit is decreasing here. If debit decreases, then it changes into credit. So you will have to credit this account. Therefore, write here two cash account with the amount of this 20,000 taka. Okay. Write here the summary being goods purchased for cash. Look at this transaction now. January 20 bought goods from Mr. Mizan taka 25,000. Write here the date January 20. See, there is a name mentioned here in this transaction and the word cash is absent here in this transaction too. Therefore, you have to assume that this transaction is not a cash transaction. This transaction is a credit transaction. As this transaction is a credit transaction, so instead of the person's name, you will have to write either accounts receivable or account payable. See, for purchasing goods on credit means the company will have to pay the money in future to Mr. Mizan. That means for this transaction, instead of the name Mr. Mizan, you will have to write accounts payable. Okay? Not only that, look at this word goods. Instead of this word goods, you will have to use the word purchase. Bought goods means goods purchased. Now you have to find which two accounts are involved with this transaction. So ask yourself this question first. What has come into the business? The answer is goods, isn't it? By asking this question, you have got one account and that is goods account. Is this word goods can be applicable for passing journal entries? Obviously not. Instead of goods account, the new name of the account will be purchase account. Now use dealer rule to find out whether this account is debit or credit. Purchase is an expense account. For buying goods, expense is increasing here. Again, expense is a debit item. That means debit is increasing here. If debit increases, then it remains debit. So you will have to debit this account. Therefore, write here purchase account, debit, and write here the amount that is taka 25,000. Now you will have to find the other account by asking yourself this question. What has gone from the business? Nothing. Nothing is gone yet, is it? Because company purchased goods without paying any money to Mr. Mizan. The company will pay him the money later. That means liability is increasing here. As you have no answer for this question, therefore ask yourself this question now. Why has come? For purchasing on credit from Mr. Mizan. Okay. The name Mr. Mizan is the other account that you are looking for. But for credit purchase, instead of Mr. Mizan account, you will have to write here accounts payable. Now you will have to find out whether this account is debit or credit. Account payable is a liability, right? As the company will have to pay the money in future, its liability is increasing here. Liability is a credit item. If liability increases, then credit will also increase. If credit increases, it remains credit. That means you have to credit this account. So write here 2 and here the amount taka 25,000. Write here the summary being bought goods on credit. Look at this transaction now. January 30. Paid to Mr. Mizan taka 25,000. See, previously in this transaction the company bought goods on credit and the amount was taka 25,000. Now in this transaction company paid the money to Mr. Mizan. Now ask yourself, what has come into the business? Nothing, is it? As you have no answer of this question, you have to ask yourself this question now. Where has gone? The answer is to Mr. Mizan, as the company paid the money to him. Okay? From the answer of this question, you have got one account here, and that is Mr. Mizan account. But for this transaction, you cannot write the name Mr. Mizan here, because you know that when goods purchased from someone on credit, then you have to write account payable instead of the name of the person. Now you will have to find out whether this account is debit or credit by using dealer rule. What does account payable mean? It means liability. For paying the money to Mr. Mizan, liability is decreasing here. Liability is a credit item. If liability decreases, credit will also be decreased. If credit decreases, then credit will turn into debit. So write here debit and here the amount taka 25,000. Now you will have to find out the other account that is involved with this transaction by asking yourself these questions one by one. What has gone from the business? Cash, hasn't it? The answer of this question, cash, is the other account that you are looking for. So write here cash account. Now you have to find out whether this account is debit or credit. Cash is an asset and cash is decreasing here. Cash is decreasing means asset is decreasing. Asset is a debit item. Therefore, if asset decreases, debit will also be decreased. See, if debit decreases, it turns into credit. So you will have to write here the word to, as the word to means credit. Here you will have to write taka 25,000 and here the date January 30. Write here the summary of this transaction being paid cash to Mr. Mizan. If you add these amounts of this debit column, then you will get taka 1,70,000. Same amount will be here. Last of all, close the accounts like this. So, my dear students, I hope all of you understood the topic well. I will try my best to upload the next tutorial, that is part 2 tutorial, as early as possible. Thanks a lot for watching.